day.
The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 416. NASDAQ is up 98. S&P is up 54. Gold contract up $47, trading at $17.31 an ounce. You got silver up 60 cents, $15.81 an ounce. Light sweet crude up $1.63, $26.71 a barrel. Notes and bonds. You got the 10-year up 5 ticks, trading 138 flat. 30 up 3 ticks at 178.12, and King Dollar down 433 ticks, trading 99.686. The euro is at 109. The yen is at 108.69. The British pound is at 124 to 1 U.S. dollar. What a ride, Tom.
Weekly jobless claims, 6+ million, and the market takes with it and jumps 100 points in the S&P. How about it, man?
Shakes it off and moves higher. Let's go over to our man, Mr. Kevin Hinks, TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time, you want to understand the option market, option strategies, futures, outstanding program. If you haven't test-driven yet, the Thinkorswim platform, so easy to do. You're sitting on the website right now. Hit that banner. Bring it up to allow you to trade with paper money each and every day. You can follow Kevin and his team. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. You know, Tommy, you left out one small detail about that 730 number, and that is the Fed also announced $2.3 trillion in additional spending. So, that had a little bit to do with what's going on too, but again,
it sure does.
You guys are right. It's the release of these numbers, and it's the overall, you know, the U.S. economy and the U.S. population getting comfortable with where we are and the improvement in the overall numbers that are causing these economic data points to be pretty much understood and moved on from. I mean, this is now the E-minis are coming off here a little bit, off some of their highs, but they're still up almost 2% on the day, guys.
Yeah. Hey, you know, Kevin, you know what's going to be interesting? What I've been thinking about, right? You know we went through 2007, 2008, and depending what camp we're in, you know, there's plenty of people thought inflation was going to come in, didn't come in. The bottom line is it didn't come in. But when I'm looking at this market, and you know, you still get the same war, folks, okay? Because debt burden is basically deflationary. Stimulus is inflationary. But I'm even looking at these asset prices, and I'm saying to myself, my take is that inflation is going to come in. And I think even with people scratching their heads, well, and if that happens, the bottom line is that companies are going to basically cost more money numerically. Do you know what I'm saying? So it's going to be really intriguing, you know, a year from now to see where this stands. If, in fact, that's what we're seeing inside the marketplace also, that prices are just going to go up, period. You know, that, you know, if we paid $1 for something, maybe it's $1.20, you know? So.
And, you know, and not to mention that you could see a flush of manufacturing come back to the United States as manufacturers choose to move things, you know, closer to home, and that could raise, you know, the price of manufacturing, which could raise prices as well, although that price increase would be worth it.
You know, I think that's going to happen in vital industries. I mean, it has to. It better happen, right? I mean, right. You know, the reality, folks, is that, you know, vital industries. You can see in this aspect right here. The bottom line. You know, I would say if I was in the manufacturing business, I would try to find a vital industry, and bottom line is I'd open a factory, you know, because I think that's going to happen. I think that's going to be real, and I think it's going to be mandated, not mandated, but let's say if we were running a state or a county or something, you'd want to make sure you get supplies for your people, right? You know, so I can see that happening.
I believe, Tom, one of the things that's going to come out of this is that the term strategic reserves are going to take on a whole new definition. Right?
Yes.
And they're going to be strategic reserves in a lot of things now that we didn't. Normally, that was just thought of as crude oil.
Right.
Right? Was the strategic reserve. Now it's going to be a lot more things than that, frankly.
No, I agree. And, I think a lot of us individually, like whether you save this or save that, I think it's maybe easier when it's just individually and family-wise, save something for bad times. I think even medium-sized companies are going to have to basically get along the same deal because, we'll see the hurt in this, whether it's the medium-sized companies, some of the larger companies that were too leveraged flat out and didn't save anything. You know what I'm saying? So I think we're going to see more of that too. There's no doubt. But pretty wild what this market is doing.
There's going to be a lot of repricing going on of things. Like everything is in flux now, right? I mean, what you see in the airlines, what you see in hotels, what you see in everything that's airlines that leads to Boeing. Things like that. There's so many things that are going to change in this economy, and it's going to take a while for the dust to settle on where the final thing is. But deliveries are going to go up. Brick and mortar retail will probably go, pushed further down. You could see a lot of things go on here. I mean, we could spend a whole show just talking about the changes that's going to go on in this economy over the next 6 to 12 months.
Yeah, there's no doubt. And if we've learned anything, folks, just like the Fed coming out this morning, this is not going to be the end. Because, when you look at the market, folks, and you look at the amount of places that are closed down, the bill that the Congress put through is a great bill. There's no doubt about that. What has happened in that bill, though, there's no doubt, is that more than half the people in the United States are going to end up making more money for 4 months than they've ever made. So my take is that we're really not going to see this economy really start to get any traction, Kevin, until like next September. Because, if I was 20 years old, man, and, the bottom line is that you're getting $1,000 a week for 4 months, I mean, I'd be on the road, man. That's a no-brainer.
You can make a case that some people, and it'll probably be a very small fraction, are going to do better in this environment.
It's a large fraction, though. It's a large fraction.
Right.
It's more than half of. It's almost every restaurant, every bar, every any of those places. It's like, okay, why? It is what it is. It's you take the 600, you put it on top of the unemployment, and the bottom line is that and that's not the end of the world either, because what you do have, I think it's going to take that long to sort itself out anyway. Do you know what I'm saying? So.
Right. If that payment and that situation gives this economy a little flack, probably not the worst thing in the world.
No, it's not, because people will be flush with cash, man. Right?
Right.
I mean, and the other side of that, you can figure out something that they're going to spend it on, man. The bottom line is that there's going to be a lot of money spent, man. No doubt, man.
Right.
Well, listen, man.
Now we just got to get everything back open.
You have a great Easter, a safe Easter. Always a pleasure. We will talk to you next Tuesday, man.
Thank you so much for having me on. Talk to you soon, guys.
Thank you.
Thanks, Kevin.
And right here, folks, 45 minutes from now, outstanding show. You stay right there. Tommy and I are coming right back. We have the Dow up 420, NASDAQ up 58, S&P's up 52. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 333, Nasdaq's up 28, S&Ps are up 44. We got to go over to the Nasdaq, folks, and Tom, to see what just put the kibosh on these futures.
Yeah, all of them, man. But yeah, Nasdaq barely, we'll call it flat to barely positive. What did happen?
Okay, so we just went from let's see, 83.26. This is too much, man.
Everything's too much. I hear you. Go
Seriously,
for it.
It's 81.96. So let's go inside the NDX and see what the weakness in here. So Intel down 3.8%, Citrix down 3%, Intuitive Surgical off 2.3%, and Activision off 2.2%. The leaders out here, United Airlines up 16%, American up 11%.
Didn't we talk about this yesterday? Not to jump in there, but when an index that's so technology driven, like the Nasdaq is driven by United Airlines.
That's right. It's a problem.
Watch out.
Yeah. You don't like to see that. There's no doubt. There's no doubt. You know, that being said, though, what you have here, folks, is that the Qs are in a confirmed ABC structure on the way up with a 210 price projection. So we'll see how that shakes out. But and what did happen here, just as Tommy said, yesterday morning, the four leaders were all in the travel business. By the afternoon, only two of them were in there. You know, so a couple of the tech stocks did get in there. So
and you know, it might be those airlines that just dropped off. Just so I mean, United was up at above 34. You're now at 31.80, so you're still up 15%, but you just gave back $2 on a $34 stock. And American, similar deal. We were up to 13.40. Now we're at 12.40, still up 10%, but you lose $1 in a $13 stock, man. Huge moves in those airlines, as you'd expect. And this is, you know, even if the trend is up, which I think it is off those lows, man, you better be ready for some down days like we saw on Tuesday, because the volatility, even if the trend is up, which I know you're a huge Bill, I believe in it too, as in, you know, this is temporary, folks, you know, so over the course of a year or two, hopefully things reset. This will be in our rear view mirror, which is remarkable to even think about right now. Life is so weird, man, right? You know, the expression is, this is so weird, this is so crazy. It's like nothing we've ever seen.
Yes.
And I can't wait for that day when, you know, it's not even a factor in our mind, but it will be a factor in terms of being hyper aware, like we've never been hyper aware. But this is going to be around for a month, a year and a half maybe, but then it's gone. So then how does that play? You know what I mean? The market is very forward looking. You have all that stimulus, you have those gone. I imagine that, you know, we'll be going up, but just like we saw Tuesday, 900 points to nothing by the end of the day. Just insanity, man.
No, totally. So let's go take a look at that gold market. So bottom line, folks, is that now gold, folks, is in a ABC structure in the way up. 1804 is the price projection. You know, we had got up, and this is where you can really just learn a lot about, you know, how these things like to move, folks, okay? The bottom line is that when we had gone up on Tuesday, gave it up on price, but you can see the volume. When you go up on volume, give it back on price. Most times you go right back topside, which we're doing out here today. What you're also going to have, and this is what's going to be pretty cool, we're going to have volume again today inside the gold market. We're at 116,000 contracts already. You're going into 204. And then if we look at some of the equities inside it, we're in an ABC up market inside the gold market. And this is going to be a wild one, because what you have out here today, it looks like a lot of them are going to basically take out the B point, and we'll see where they get the volume. We have big volume in these equities right now. Like if you look at Royal Gold, it's going after the B point. And, you know, bottom line is that we'll see whether we get it. 227,000 right now. This is up 6.5% right now. We're going to need 1.2 million. You know, so it's going to be a close one, basically, because what does happen at the beginning of the marketplace, you know, you get some decent volume, particularly the way this is taken off. Now, one of the targets is looking at Newmont. Newmont is a monster, folks. Okay, this is not only it's up $4 right now, $4.30. But what you're going to see in Newmont is a much larger move out here. You're taking out your swings that were generated in August of 2018. You get volume behind the move. That's saying Newmont, man, wants to go to $70, which is his all-time high of 2011. So my take is that gold's going to a new all-time high, folks. That's how this is shaking out. If I put up the continuous contract inside of the gold market, what you're going to see is that we bring this back.
That's a lot of strength over the last 2 weeks, man.
Oh, it's a monster, man. This is, you know, you can see your all-time high in gold, folks, is 1920. We're at 1716 right now. There's nothing to stop this, man. You know, 1794. Yeah, you can, but the larger portion on a monthly, you know, and you got to remember something. The way that this works, if we did this, watch this. This very well could be a much larger ABC structure up from the beginning of the bull market in gold in 2002 until the high, because what we had done, and this is what's so wild, folks, time is like crazy, man, because what you're going to see here is that we did a 50% retracement on a monthly basis of the whole move. So you could have a monster ABC structure up, man. I mean, and it doesn't bring it that much higher, actually. It does. Well, it's not. It's 20-something here. 1920, and then it's 250 away from it. Yeah. So it's 250.
Like 1,700 points, almost the A to B, right?
That's right. Yeah, so that's 2,700. And we're on 17.
2,780, almost 2,800. Yeah.
So it's a huge number. And when I was, this whole thing, we're just talking to Kevin, I really think that inflation is going to come in because there's so many dollars coming in, and that's what we might be seeing in the marketplace too.
Sure.
Because if that's what it is, folks, everything will cost more money. That's flat out. That's what it comes down to.
And just look at, I was just going to pull up, we're talking about retracements, man. I talked about it in that update. I mean, remarkable that the S&Ps, we've clawed back half of that collapse, man, from 3,400 down to 2,174, more than 1,200 points. But just like that, we're up 600 points right off the low, man. And you know, percentage-wise, to be up 600 points on an index that was trading at 2174, geez, it's you see why, right? When all those statistics get said, you know, if you miss the the 15 biggest days in the market
Right.
over 10 years, you make like no money or something like
Yeah,
that.
no,
You know,
no, that's real, man.
it's because just since March 16th, the S&Ps have gone up 30% or something. You know, well, yeah, we fell off 40% from 3,400, so keep it in context. But that's quite a pop, man. So
Right.
don't be surprised if this market breathes a little bit on its way up, just having gone up, you know, gangbusters from that 2,100 low.
Right. And if it's a repricing, folks, you know, there's no reason it can't reprice at like 20%. You know.
Yes.
And,
yes.
You know, what that would mean is that, yeah, you know, the bottom line is that you have more dollars chasing less production. And, you know, I can see that happening because you have two different things. You have the flooding of cash coming into the society, which you need, flat out. You have less plants that have been working, but yet more people are going to have money and there's less goods. So it's like, okay, are you going to spend $2 more on something that costs $10? And if you do, that's 20%.
Yeah.
Even if you spend $1 more. If you $1 more,
Sure.
that's 10%, right? So stay right there, folks. Tommy and I come right back. Dow up 400, NASDAQ up 31, S&P's up 48. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 430, NASDAQ is up 34, S&P's up 50, and that NDX 100 is quite a lagger, huh?
Yeah, I mean, the volatility, it's swinging back and forth. But like you said, man, I mean, those technology stocks, I don't know what, I mean, what are some of the FANG stocks jumping around?
Yeah,
I mean,
let's take a look. So you
Amazon's actually negative today, right?
Yeah,
So maybe,
Amazon's down 15. Facebook was down 164.
There you go.
Apple down 2 pennies, that is.
Microsoft's down $1 or 0.6%.
Yeah, so isn't that wild, man?
So there you go.
Yeah.
If you're in the NDX 100, folks, say thank you to United Airlines.
No, totally. Hey, listen, I was listening to you about Zoom. So talk to me about Zoom. How does this work with Zoom? I heard.
Yeah, you know, I personally haven't used it, but I've been on the internet, man. I've seen the kind of whether it's people tweeting out things that you might not realize. Number one, all of the real warnings have to do with real security, as in terms of, you know, if TFNN had a big meeting about the workings of the company, man, what if somebody else gets in there, right? They got all your secrets, whatever it is.
I see.
That
okay,
type
cool.
of privacy, and that's why Google's not using it. That's why senators aren't supposed to be using it, I believe, is the real crux of it.
Right.
But just going beyond that for normal privacy in terms of things that you are actually agreeing to, in part of their terms and conditions. For instance, if you're going to one for, let's say you're in grad school, you're going to a Zoom conference, okay?
Yeah.
There's an attention feature in there where the host, let's say they're the teacher in this instance, is able to see if the Zoom screen is not the forefront screen for a period of 30 seconds. Now, I found this especially interesting because in today's day and age, people have multiple monitors, right? So maybe I have the Zoom screen up on one, I am watching it. Maybe I have the market. Maybe I have Thinkorswim platform up on my second screen, but Thinkorswim becomes the forefront screen that happens to be the one in the forefront, right?
Sure.
Even though they're both up, that host gets a notification that I'm not paying attention to the screen. Then you have the stuff that I really found surprising, private messages, right? We have private messages in the Den. Quick shout out for the Den open house on the front page of TFNN. But I couldn't believe that private messages, and this is where, guess what? If you're attending a webinar for school, okay, you better not be private messaging during that webinar and be completely unaware of the fact that the teacher controls everything that you're doing, okay? And they get a printout transcript, including private messages. I imagine a lot of people, students, employees might.
And is it your? Let me ask that. Is it your understanding that let's say that you're the operator of the conference?
The host? Yes, there's a host of the thing, right?
So can you see my screens also? Or is
that's I believe that's a feature of whether they do it or not, and it's also a feature whether you share your camera or not.
Okay.
So that, I believe, and again, I haven't used it, but
no, it's great to know, man. Because I tell you, I've been on a Zoom conference almost every day. No, well, 3 times a week, right? And the bottom line is that, you know, I got my trading screen up simultaneously. So that's pretty intense. I can see why.
You want that's the stuff and I'm not sure. I'm not sure. You know.
Right.
And so guess what, man? If you're not sure, I wouldn't be doing it, right?
No, for sure. I got it. I got it, man.
Have you read through the God knows how many pages of terms? Right.
Yeah. Right.
So that's something that I could definitely see. I believe they might know what apps are running at the very least.
Yeah.
Okay, so they probably, I'm guessing that they unless you're sharing it with them, they can't. But I believe they may be able to keep track of what apps that you are running.
So these guys, you know what's interesting about this is that all of these guys that developed and women that developed them, they must come off these other companies that were larger, and they know that inside that they put that in there on purpose, right? They put that at some point, so they could either get information, sell the information, right? I mean, that's where the big money is, right?
And really, I'm sure it does help them develop a better product, right? I mean, if you realize, like, okay, the average person using Zoom has 5 apps up. Those apps are using this much computer space, you know, so we need to make sure. So you can make an argument, right? Well, I need to know what our users are doing so we can, streamline our app, make sure it's firing on all cylinders. And what usually happens is that the reason why companies like Google and stuff like that have been pushed to be more aware of that is a lot of times from public sentiment, man, that they don't do it out of the kindness of their heart. Stuff like this happens. Terms and conditions become public.
Yeah.
The internet flips out, right? And there's enough pressure on these companies to say, okay, you're right. We shouldn't have done this. Facebook, one of them, the arch offender, right? And there just hasn't been this type of attention paid to Zoom. Nobody reads the terms and services of smaller companies. So they've, it's like it's only come to fruition, come to light because of the attention that they've finally gotten. And I don't even want to come to their defense, but guess what? This stuff's probably really hard to program and be perfect about. You know what I mean? In terms of getting an app like Zoom to operate flawlessly and then making sure that all of that's perfect. Well, you're trying to grow a business too. And I'm talking about any business, you know? So there's that inside of it. And that's why we expect perfection from the likes of Google, Microsoft, Facebook. Well, they're almost $1 trillion companies, right? When you're starting a company, they're not worried about the internet flipping out over privacy.
No, they didn't expect to go from like a couple million users to 200 million.
They're just worried about it working and growing. Exactly.
Right. Let's go over to the bond market. So notes as well as bonds, folks. Well, let's take a look at the 10-year first, and you're going to see, bottom line is you got a sideways move out here today. You're at 138.05 on the 10. You got light volume. We'll see where this wants to shake out. My take, though, is that you're going to go to the lower end of this consolidation at 133.21. So we'll see where that. Basically, we have not got any selling yet. What we did do is on Tuesday, you sold down to 137.16. You had a slight uptick in volume, but not enough, because when we were going back up on the 20th, we went up with 1.6 million. So there's still no sellers in that market. And what's intriguing there is that we know that the Fed is in there buying. Yes. So the real question is going to be like, how much more are they buying? I did go from, and this just happened this morning, folks. I went from a bull to a bear inside the note and bond market. And I think this is like, oh my God, I don't know how long I've been a bull. I mean, it's like years, man. I mean, it's like pretty crazy. I think it's 11 years or something. I know. Isn't that wild,
There we go. I saw that email come across to Time Digest. Yeah.
I think this is it. We'll see. I mean, even when I was looking at it, I was saying to myself, oh my, I was going to call Larry.
Right?
Yeah, totally. Oh my God. And this goes right back to the thesis, folks, of the aspect that I think inflation's coming in. And so what would end up happening is that you could go up on the rates as long as the rate of inflation is higher than the rate that we're charged for money. That's how that thing shakes out. Yeah. Dow Industrials right now up 511. We get the Nasdaq up 50. S&Ps are up 60. Stay right there, folks. Tommy and I are coming back. We're going to be talking with Jim from Palm Harbor.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 493, Nasdaq's up 57, S&Ps are up 60. Let's go to our man Jim in Palm Harbor. What's going on, brother?
How are you all doing today?
Doing great, man. Yourself?
Doing pretty good. Just trying to avoid the virus.
Yeah, that's right. There's no doubt about that, man. That's you got to stay healthy, man.
Yeah, I'm in the older category, almost 70. So.
Almost 70.
So,
oh my God. Jeez, you're over the hill, yeah. Jim. Jeez. Listen, man. This is you got to just. At 60, I start counting backwards, man. I'm only 51 now.
Yeah.
Yeah.
I had an aunt that told me she did that years ago.
I'm telling you, man, it works. I just said, I was going to stop at 50 and start counting forwards again, but I think I'm going to stop at 45 and then count forwards again.
Well, that's a good way to look at it. I try not to even just think about it. I just live every day.
It's a fact. Exactly. Because it's a head game, man. It's definitely a head game. So.
Oh, it absolutely is a head game. Yeah. The reason I called, I wanted to get your and Tommy's opinion. I know we're a little ways away from earnings yet, but I'm just trying to wrap my head around whether the earnings, even if they're pretty good on this report based on the past, would the markets, how the markets might react to whether they're good or bad going forward. It's kind of weird. I just don't know, because nobody knows exactly what's happening with the earnings. A lot of the guidance has been taken back, saying, well, we're not going to give guidance because it's too wild. We don't know.
No, listen, I think you answered your
question. Just wondered what y'all think about it.
I think you answered your question. I don't think anyone in their right mind can turn around and say, what someone's earnings are going to be right now, because it's like, it's just the dislocation is so big, right? I mean,
yeah.
It's like.
But let's say you had a good company. It's not necessarily a fantastic company like Microsoft and Amazon and all these.
Yeah.
Just a good, solid company, and they have what the market might consider a pretty good earnings report, considering everything. If you have a whole lot of companies doing that, would the markets go up because they feel like, well, it's better than we thought, but the next one's going to be really bad? Or if they were really bad this time, would the market say, well, we knew it was going to be bad, but we're going up anyway?
I almost think that what we really have to look at is that who are going to be what are we going to do different, and what are you doing different right now? And let's picture the economy opens up. Then what are we going to do? I mean, I can't picture, I think big venues are going to be in trouble, because even if 10 or 20% of the people don't go to big venues, right? I think, and that's baseball, hockey, football. I mean, I think that it's not that they're public companies, but that's kind of the way that I think this through. Do you know what I'm saying? I think restaurants in general are going to be in trouble. I think some restaurants that have takeouts are going to be in great shape, because, they're performing right now. And then that's what I'd be basically looking for, that, okay, who was a good company before? And as long as they're basically, not in that retail business where they depend on all of us going out every night or spending money. You see what I'm saying?
Yeah.
It's a tough one, man. That's the bottom line. I think, and I'll go back to this deal, Jim, which I said earlier in the program. I think that what we're seeing right here, because this is a heck of a rally, man. I think we're seeing that inflation is going to come in, and the Fed's going to keep pouring trillions of dollars into this so that we all stay alive and kicking. And so prices will be basically, if something was $1, it's probably $1.20. You know what I'm saying? So that's what it seems to me, and they have to, because the bottom line, folks, could you imagine if this ever happened and we were in the 1930s? I mean, we would have lines just like you see those pictures. You know what I mean? On the street.
Yeah. Yeah, from the Great Depression.
Yeah.
Yeah, I think that was what was worrying a lot of people that I've talked to is what about food? And that's why a lot of people were trying to hoard food and toilet paper. They thought if it gets like in the Depression days, they would have to have something, But this is a lot different now. We've got telecommunications with all the scientists working on the problems, and we've got a strong banking system now, and we've got the federal government stepping in with all these programs, which I really have been impressed with the way Trump's group has handled everything. It's such a complex issue on different levels that it was going to be difficult no matter who was in there, and I just think they've done a really good job.
Yeah, and it's going to be really difficult opening back up, that's for sure. Bernie Sanders must be going out of his mind. I mean, because what you have here, folks, is that these are all Bernie Sanders. This is like, you can fight the socialism and you can fight the deal, but this is what we're talking about here, man. Do you know what I mean? The amount of money that's coming in, it all of a sudden, where'd all this money come from, right? You can make a lot of different arguments there. I mean, I think they're doing the right thing. I'm not saying that, but if I was him, I'd be going on my freaking mind that for years, just let's just say the healthcare, and we'll see what ends up happening after this if they basically line up on both sides. Us being in Florida, folks, okay, you had a Senator Scott right now. He's like out of his freaking mind. I mean, even when for poorer families, he decided not to take something like, $70 million from the feds a few years ago just to make sure that poorer families couldn't be on the health care deal. So we'll see whether that keeps going. I think that's going to, I think it's going to change. I think that's going to be the first thing that politicians got to wrap their head around. Is like, okay, man, because we pay for it one way or the other. Do you know what I'm saying? So, yeah.
Yeah, they want to make sure that if we get in a situation like this again, it's going to be a lot better prepared, especially the hospitals and the way they handle a crisis like this. I'm sure of that.
Yeah, no, I think it's even when Kevin Hincks was saying that, we had the
medicine type thing.
Yeah, we have the oil, reserve. There's going to be a medical reserve now for sure. I mean, they better be. I think for all of us, that's a fact. You know what I'm saying? There's no two ways about that. Earnings, Jim. Earnings are a toss-up, man.
Yeah, we can be feel blessed that it wasn't a more serious virus, something like Ebola, where you're bleeding out your eyes and everything, and it's like 95% fatal instead of 95% survivable.
Yeah, and that we're in the United States, just the amount
really
of bread that's going into the economy. I can't imagine being in, these other countries are going to get hurt, man. I mean, that's the bottom line, so.
Yeah.
Cooking, brother.
Well, thank you all. Have a good one.
You too, man. Stay right there, folks. Tommy and I come right back. Dow's up 436, Nasdaq's up 62, S&Ps are up 58. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 405, Nasdaq's up 51, S&P's up 53. You know, Tom, I heard you on the show. I mean, those numbers on Disney, man, this is something else, man.
It sure is. And this is where you're going to see, I think, some of these companies that just get hit so hard, man. And Disney, they, not to say they deserved it, right? But the impact that they're going to have is understandable in terms of no theme parks, no movie theaters, a lot of struggling movies in terms of struggling to get produced, shutting down. But you got Disney Plus, man, and thank goodness for Disney that they launched this streaming service in November. Talk about if they had missed the boat here, Tom, right? Can you imagine if this wasn't scheduled to be launched until they would get it launched no matter what? But the timing almost couldn't be more perfect. They launch it in November. The world shuts down in January and February, and they have 50 million subscribers, man. Netflix is only up to 166 or something.
That's crazy, man. 50 million.
It is crazy. I agree. Even Disney, man, if you're a long-term investor in Disney, they might live and die by their subscriber numbers in the future. They're always going to have the parks. The content they have is just remarkable, man. And, I mean, even though today the market's still punishing them, then you're almost up to 110. You're back down now only at 105. So continuing. You know, another one that jumps out at me like this is a company like Uber, man. They're taking it on the chin everywhere, but they already came out and said they're going to have cash in the long run. And you know that they're gaining customers quicker than they would have for Uber Eats and all that stuff. Then maybe you're in their ecosystem, and when all resumes, they're a better company for going through this because people were forced to adopt their technology. I could see that type of deal too. That it just rang to a similar comparison.
There's no doubt. And folks, as we finish up this hour, don't forget, our man, Mr. Basil Chapman, is going to be doing an outstanding workshop for everyone out here. Check it out on the front page of TFNN. It's going to be April 15th. It's a live webinar, folks. You'll be riding that wave.
9 a.m. till 4:30, man. Is that enough education? I think so, man.
And this market, man, that's a beautiful thing.
Totally.
Stay right there, folks. Think or Swim coming up next. Then I'm Mr. Basil Chapman, Steve Rhodes, Dave. Wait! I'll be back this afternoon. Thanks,